Good morning and welcome to the Nephos Group podcast. My name is Jamie Nuttall and I'm here today with Michele, all the way from Italy, from AndPartners. How are you, Michele?
I'm good, thank you. And Joe, thank you to invite me at this session.
No problem at all. We had a wonderful time last time with the team, so we thought we'd invite you back to talk all things tax and Italy. So it's my understanding there's a new Italian tax regime. Could you perhaps tell us a bit more about this?
Yes, for sure. Well, last time we had the chance to analyze the regime dedicated to impatriates, the so-called rientro cervelli, and now we are going to understand a little more in relation to the regime dedicated to individuals who wish to transfer their tax residence to Italy. And this regime consists in the possibility of applying a substitute tax on incomes generated abroad. So in a nutshell, it is possible to opt for a regime for a 15 years period, regardless of nationality, and individuals, as said, shall pay a substitute tax to their foreign income, which amounts in 100,000 euros for each fiscal year. And so the key word is, of course, the incomes generated abroad. So if you have a foreign activity, the income generated abroad falls within this regime, while the incomes generated in Italy with your new tax residence, of course, in Italy, are subject to ordinary rules. But the tax regime may be extended to family members by the payment on the foreign income of a substitute tax of 25,000 euros per member. And to apply to the regime, it's necessary to either submit an advance tax ruling to the Italian Revenue Agency or flag the option for a substitute taxation and tax return. And finally, inheritance and donation tax are due only for properties and assets existing within the Italian territory. So which means that if you hold properties and assets abroad, these will fall within the tax regime.
Okay, to summarize, if I were to leave the UK, that's where I currently reside, and to move to Italy, any of my income generating assets, for example, outside of Italy would be usually subject to Italian tax. However, instead of paying the local tax, I could pay a flat rate of 100,000 euros per fiscal year instead of?
Yes, exactly.
And if I wanted to bring my family members along as well, they could also partake in this regime for 25,000 euros per member
Exactly.
per year. Okay.
Yes.
So why was this actually introduced in the first place?
Well, the regime was introduced, of course, the aim was at enhancing investments and attracting to Italy high net worth individuals. And over the years, the tax regime traced attraction. For example, according to a few statistics results, in 2017, 98 individuals opted for the regime, while in 2020, almost 800 individuals opted for the regime.
Okay, so the actual traction of it all is taking some pace by the sounds of it. Seems like there's a lot of people, or more and more people as time goes on, starting to actually want to be involved in this regime, which is positive news by the sounds of it in terms of bringing sort of monies into Italy. So we know why it was introduced, and we know the fact that it's gained traction now. So who's actually eligible for this regime?
Yes, well, both foreign and Italian citizens can apply to the regime, provided that they have been fiscally resident abroad for at least 9 of the 10 fiscal periods preceding the year in which the regime becomes effective. And individuals benefiting from the tax regime can request the extension to one or more family members, as said, so spouse or member, children, parents, sons-in-law, and etc. And the regime applies, of course, only if family members move their residence to Italy and had been resident abroad for at least 9 of the 10 tax periods prior to the transfer to Italy. So the same rules that apply to the main new tax residents will apply to the family members who wish to transfer to Italy.
Okay, so it really is for anybody who isn't a tax resident in Italy for, was it 9 of the 10 fiscal periods preceding the move?
Exactly.
So even if you are an Italian citizen, an Italian domicile status who moved away, you can come back and actually make use of this.
Exactly.
Okay, and which income's actually included within this? Because I know there's a big scope of potential here.
Yes, there are a lot of income that are included in the regime. We'll try to focus in the main one. So we say that as said before, only income generated abroad is subject to the subsidy tax, while income generated in Italy is taxed according to the general rules. We said that. So the incomes falling with the regime are income from self-employment generated from activities carried out abroad, income from business activities carried out abroad through, for example, a permanent establishment, or income from employment carried out abroad, or income from a property that a new resident owns abroad. They also include interest from bank accounts paid by non-residents, capital gains generated by new residents following the sale of unqualified shareholdings in foreign companies. And then a specific exemption from Italian inheritance and donation tax also applies.
Okay, so there's quite a lot that's actually within the scope of what would be considered as income in this particular regime. I noticed you talked about self-employment generated from activities carried out abroad, as well as employment carried out abroad. So if I'm a high net worth individual, an ultra high net worth individual with, say, a salary of over $1 million for whatever reason that might be, we could actually take advantage of this while wanting to move to Italy, for example.
Exactly. So the key words is, as said, that from the list is the income generated abroad. So with a large scope of incomes generated.
Okay, so we know what's actually included, which is very helpful and specific. But are there any specific exclusions to this regime?
Yes. We are focusing, for example, on capital gains. So capital gains resulting from the sale of qualified participations, so held in companies and non-resident entities, made during the first 5 tax periods of the regime, cannot be subject to the substitute tax. And this is to avoid that individuals who hold a qualified shareholding in a foreign company able to generate a considerable capital gain decides to move her residence to Italy for the sole purpose of benefiting from the tax incentive. Therefore, in the event of sale of an investment before the end of the 5 years period, the capital gains is subject to the ordinary tax provided by Italian law.
Right. Okay. So
it's like an anti-avoidance clause.
I see. That makes sense. So would I technically have to wait 5 years then to make the sale? Is that what we're essentially saying here?
Yes.
Okay, and this is only for capital gains when there's a qualified participants held in the company and non-resident entities.
Yes.
That's a very, very specific exclusion. We appreciate that. So we know what's involved now. We know what's excluded. We know what the regime entails with great detail, which is wonderful. I'm sure there's many listeners right now thinking, right, fantastic. I'm going to do that. Italy is a wonderful country. How do I actually apply for this to happen?
Yes, actually, before answering to that your question, I wanted to point out a thing that I forgot to tell you, and is that and it refers to exclusion, because we have said a particular exclusion, but we have to understand a broad exclusion like clause, and say that it is possible to exclude the income generated in one or more foreign countries or territories from the application of substitute tax. So you can do the so-called cherry picking of jurisdiction. So if you have the incomes generated abroad in that jurisdiction and you see that according to the double convention you pay a certain tax, and then you make a comparison with the tax pay with the substitute tax, so it's 100,000 euros. So if you see that it's more convenient paying 100,000 euros, of course, you opt for that jurisdiction to the tax regime. But if you see that by applying the double convention is more convenient, the application of double convention, of course, you exclude from the application of the tax regime that jurisdiction. But be clear, the cherry pick applies only to jurisdiction, not on incomes generated to that jurisdiction. So that is necessary to point out. And that's why it's really important, even if it's not compulsory, but is really recommended to submit a tax ruling to the Italian tax authority, and to perimeter, the application of the tax regime.
Okay, so for within the UK, this double convention is the Italian equivalent to our double taxation treaty, if you like, where so Michele, essentially what we're trying to say is when we're cherry picking, it cannot be by asset. It has to be within certain jurisdictions, and the whole of that jurisdiction would be ring fenced and either part of the regime or not. And we're using the double taxation treaty or double convention to make that assessment, and then actually determine if the traditional way is going to be more beneficial than this particular regime. If it is, then we'll opt for that, and if it isn't, we'll opt for the other one, and we can do that by jurisdiction is what we're saying.
Exactly.
Wow.
Yes.
Okay, that's very good to know. It's certainly a very important point because the tax planning from that perspective could be colossal and have huge implications. So I'm excited anyway. I just want to know, how do I apply? Genuinely.
Yes, and of course we are really happy to help you. Help anybody wish to know something more about this, and or to delimitate the perimeter of this case, of course. And now I think it's time to answer to your question, because I just make a bracket and then and so you ask me how should you apply? Well, it's pretty easy, because the option of the substitute tax regime on income generated abroad shall be chosen in the tax return relating to the tax period in which the taxpayer has transferred the tax residence to Italy, or in the tax return for the following tax period. So it's pretty easy. And the how to pay is you pay in a one shot with the F24 model, and so it's a way paying taxes. And as said before, to obtain advance clearance from the Italian tax authority, individuals may file a ruling request. I want to repeat it, it's not mandatory, but it's really recommended.
Okay, so it's that simple, just to include it with our tax return. There's a non-mandatory filing elsewhere, which you would help with, presumably?
Yes.
And it's highly recommended. Is that just to ensure everything's airtight and fully above board? What is the advantage of making this filing that's not mandatory? You have advanced clearance, so of
course, if you have a complex situation, you have a lot of income generated abroad, and you want to see if, for example, we said about exclusions, like of a certain jurisdiction, you say, okay, I want to be sure that if I exclude that jurisdiction, I'm going to properly using this tax regime. So to be clear that in the future, the tax authority will not knock your door and say, oh, that you're not applying in the proper way the tax regime.
So it's a safety net just to make sure that what we are about to do is
exactly.
I see.
Or for example, you have an asset that you want to exclude, or you have something that you want to exclude, or you want to include in the regime. You ask the tax Italian authority, okay, my case is this one. I have this income generated abroad, all these, and I want to cherry pick this jurisdiction. I'm going to apply this case to. I think that in my case, this falls within the regime.
No, that
so as said is advanced clearance.
That to me, I know it's not mandatory, but to me, in my mind, that should be mandatory because it's tax planning. It's making sure this huge decision you're making is going to be fruitful and actually be worthwhile. So we're in a situation where we know what it's about and we know how to do, we know how to apply now, which is great. I'm sure there'll be some clients of mine sending me emails having watched this going, I want to move to Italy. Is there a situation where this can actually be revoked for any reason?
Yes, of course. I've said you have to be resident in Italy. And if you move your tax residence, of course, the regime is not anymore applicable. So individuals applying the tax regime can revoke anyway the option in the tax return. So I wish to move from Italy and so go to UK, for example. And this revoke will be effective starting from the tax period referred in a tax return. And if the main taxpayer opts to revoke, so the principal individuals opts to revoke, such event will also affect the family members. But if the family members decide to revoke the regime, this revoke will not affect the main individuals. So
that seems to fit the bill, especially considering the lead, if you like, in that situation would be paying 100,000 euros, whereas the rest of the family members would be paying 25,000. It makes sense that if the lead were to leave, the rest would have to leave unless could they stay and one of them pay the 100,000, become the new lead in certain situations.
Yes, maybe you do another option. Yes, it could be a case, but it would be a case to study and analyze in a proper way. Yes.
That makes sense. Yeah, it adds up on the fact that the family members are paying a little bit less than the lead. But no, Michele, thank you so much for that. You've answered many questions we've got. You've been extremely helpful. I'm sure you and partners will be thriving within this sphere. We certainly are very excited to see what you can and will do for people within the UK, at least, to move over to Italy. So yeah, thank you for coming. Hopefully we'll see you again soon. This has been Jamie from the Nephos Group. Cheers.
Thank you. Bye.